Good morning. I'll see you in 8.5 minutes.
Good morning. Let us get you up to speed on the shifting tides of the global market.
Tell us when I start. There's a timer right there, dude.
Good morning, I'm Aiden, and let us get you up to speed on the current market dynamics. I am observing a decisive shift into a strong risk-off environment as global equity markets face intense selling pressure. This flight from risk is being compounded by a climb in the U.S. 10-year yield, which has tightened financial conditions and triggered a broad retreat from indices such as the Nikkei 225 and the Nasdaq 100. Biggest movers right now: natural gas and Nikkei 225 are down. Ethereum, platinum, and silver are up.
That's it. That's it. That's her signal. You guys ready to go? Me. Let's go. All right. Guten Morgen. Hey, risk off still? What? Still? Yeah, well, then that's a good opportunity to read a risk disclaimer, isn't it? Oh, for sure. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Guten Morgen. Hey, my name is Wayne.
I'm Aiden, and let us get you up to speed on the current market dynamics. I am observing a decisive shift into a strong risk-off environment as global equity markets face intense selling pressure.
I hate talking over myself. What? Yeah, anyways. Yeah, Vic's at 30. So anyways, hey, welcome to my home office. Yeah, time to do some trading. The screen seemed to be off a little bit. I don't know. Anywho, look, the Zoom looks terrible today. But anyways, whatever. So, yeah, we got a risk-off scenario, so we're going to have to take a look at that. We also have a big macro week, right, ending with non-farm payrolls and ISM services, and we have retail sales on Wednesday. Like, ooh la la, we got lots to do. So, anyways, I'll let you be the boss. I will be your humble servant over the course of the trading week. So let me know how I can help, whether it's technical analysis, fundamental analysis, trader psychology. We're even going to look at sentiment. If you want to talk about monetary policy, oh, for sure. Just let me know I can help. But in general, welcome to Forex.Today. Please like and comment and subscribe and do all those things. So what do you want to trade today? Right now I got the beast up here. Skippity Scalpy the beast. Let me update TRADARS. Yep. And when I get around to it, I'm going to put this chart template on tradars.com for you, so you can have it for free if you want it. You like the scalping? Bada bing, bada boom. Look at that. Just a big move occurring as we
Good morning, I'm Aiden, and let us get you up to speed on the current.
Aiden, we'll get there. We'll get there. Hang on, Aiden. Jiminy Cricket, this guy, huh? Well, I guess we'll just let him go if he wants to talk. All right, I'll move it over here.
Good morning, I'm Aiden, and let us get you up to speed on the current market dynamics. I am observing a decisive shift into a strong risk-off environment as global equity markets face intense selling pressure. This flight from risk is being compounded by a climb in the U.S. 10-year yield, which has tightened financial conditions and triggered a broad retreat from indices such as the Nikkei 225 and
Good
the
morning,
Nasdaq
I'm Aiden,
100.
and let us get you up to speed
Biggest
on the current
movers
market
right now,
dynamics.
natural gas
I am
and Nikkei
observing a
225
decisive
are
shift
down.
into a
Jiminy
strong risk-off
cricket.
environment as global equity markets face intense selling pressure. This flight from risk is being compounded by
Hang
a
on, I
climb
got
in the
like
U.S. 10-year
different
yield,
iterations going
which has
here.
tightened financial conditions and triggered a broad retreat from indices such as the Nikkei 225
Let me see
and the
where all the
Nasdaq
other ones
100.
are if I have
Biggest
them.
movers right now, natural gas and Nikkei 225 are down. Ethereum, platinum, and silver are up.
All right, it shouldn't be talking over itself. I have multiple windows open. I always forget to do that before our live stream. But anywho, it's not hiccuping on itself. Me. Hey, stock markets are falling around the world. Yep, Europe was a little, trying to stabilize, but hey, the markets are down. VIX is up. Now it was worse. Yeah, it was worse, but holy smokes, VIX at 30. Remember, we kind of want it at 12. It gives you kind of perspective. 24 would be terrible, but a heck of a lot better than what we have now. So definitely risk off. Bitcoin was way down there. I think we even hit 65, didn't we? Yeah. Gold, catching a bit. Oil, WTI at 101. Holy smokes, eh? Yeah. No, not Brent. My oh my WTI. Duberden. Okay, dollar over 100 and yields are high. Which is odd, isn't it? Stock market down, treasury market down. Ooh la la. Complicated world. Germany Consumer Price Index year over year increased to 2.7% in March from previous 1.9%.
Germany March preliminary CPI plus 2.7% versus plus 2.7%. Why expected?
Germany Harmonized Index of Consumer Prices year over year, in line with expectations, 2% in March. Germany Harmonized Index of Consumer Prices, MOM, in line with expectations, 1.2% in March. Wall Street targets to bounce back to positive territory.
Eurozone economic confidence weakest in 6 months.
Trump says US holding talks with new regime in Iran. Warns of strikes if deal fails.
Euro. Sentiment weakens as dollar holds highs. BNY.
We also have jobs out of Japan tonight in the Asian session. Kind of interesting, but the big things that have my mind right now. I mean, there's quite a bit of news on the calendar. What's on my mind though is retail sales, but what? Well, it's retail sales is pre-war, so it doesn't kind of cover the stuff we're kind of concerned about. And it also isn't expected to be good or, let's say, accurate, or like it's not expected to be good because we had bad weather. So is that a reflection of the economy? No. You just didn't go to a restaurant during the blizzard. Okay. You're like, hey, I know there's a blizzard outside, but you know what? I'd like to get a suit made, so I'm going to go to Macy's. um, no, you stayed home. So there's that, right? So it's not expected to be good, but even then, we're not concerned about pre-war. Okay, so just kind of keep that in mind. Okay, we're moving into the new day. Things are bad though. Okay, things are bad. There's just no doubt about that. I want to jump ahead to the contrarian. Market doesn't really open in the United States, and in that case, the futures market for hedging and all that doesn't open up until. So watch these things move, ooh la la. A bit of a, you know, how do you say, a mixed bag? Okay, nat gas, U.S. nat gas, biggest mover here. Ethereum recovering, gold recovering, silver recovering, oil is up, yields are up, Bitcoin is up. Just kind of eyeballing it, you know. What patterns do we see? All the yens are down, right? Yeah, all the yens are down. There's a pattern. But that's indicative of risk off, isn't it? Yen being a funding currency. You want it. What else do we see? Kiwi seems to be weak. Or is it dollar strength? Maybe it's just dollar strength, huh? Dollar strong, dollar strong, dollar strong. Euro and dollar neutral. So euro appears to be fairly strong as well. Dollar stronger than Swissy. Yeah. Uh, 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 uh. Yeah, Swissy. Yeah. No. USD yen, I've covered uh, many times recently. USD yen is in a very specific scenario in which Japan has to pay more for energy. So they give up, right? They give up more yen to get the same amount of energy. And meanwhile, the dollar is acting as safe haven, but also the dollar is a petrol currency. If you're going to buy energy, you have to buy dollar. And so it's not so simple. U.S. versus yen. If we were in a different type of shock or risk off, they would be generally neutral. Anyways, right? So you have to always put these things into context. Again, U.S. nat gas is not the same as European nat gas. So you're like, but how can nat gas be way down with this war going on? Well, because it generally doesn't go to Europe. LNG is a complicated thing to move. It's expensive to move, and you need special facilities to put it on a ship. And then when it gets to the destination, you need special facilities to get it off the ship because it's highly pressurized and highly chilled. I mean, it's like 100 degrees below Celsius, or even 200 degrees below, negative 200 Celsius. It's pretty cold. And so it's high pressure and so you can't just move it easily and anywhere and at any time, right? So there's quite different prices. So some of it goes to Europe, but not very much. I believe aluminum is up today, but we're not tracking that. So, hey, just what can I say? Dangerous markets. I think you know that. Where things are moving that are not necessarily fundamental, very emotional. Denise, we were waiting as long as we could, but then we just had to go. But good morning. Yeah, some of these are not going to load. I'm in the middle of a huge, massive update. Worked all weekend. Huge, massive update to TRADARS. Yeah. So some of these are a little glitchy. So one of the things Aiden's working on right now is some of the charts just stopped doing the projections. Oops. And then you saw that flash. Part of the update is that this is near real time. So these are almost they don't update every tick like your MT4 does, but it's pretty real time, meaning every minute or two they update. So they just flashed and they just update. And so maybe that's why these are lagging a little bit. But also when we change the logic, for some reason, some of the charts just wouldn't load the projection codes, right? And so anyway, so we're in this massive upgrade of making it faster, like literally faster, even though these are lagging. Like, but wait, they're lagging. How can they be faster? Well, we are making them much faster. And we've focused on basically getting the basic idea of direction and projection as possible. I want you to be able to eyeball opportunities or threats extremely quickly. And then yes, we can give you more detail, right? Are any of these going to load properly? Yeah. But the details on your chart. I don't need this to be your charts, right? And then the next thing is going back and ensuring that these are connected to the other parts of the app, the platform correctly. And so all of that's being worked on right now, which is really cool. But these projections are important. And what we're looking at, like Aussie dollar, for example, are we bearish? Yeah, we're bearish. Why? Dude, that's a bearish chart. Okay, so we got that, but also not only is it bearish, well, hell's bells, it's fundamentally bearish right now. Okay, but, and here's the thing you really want to pay attention to. The slope of the projection. That's why this was really important to me to rebuild the back end, to make sure that these are faster and up to date and robust and stable and all that kind of stuff. So if you jumped to this using your eyeballs, let's say, 21's above 55, you're bullish. Okay. And the projection has worst case, base case, best case scenarios, which are bullish. Right? You see that? Now compare that to Aussie dollar. Flat. Yes, we're bears, but it's flat. Whoa, 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 whoa. I want you to get that and see that quickly. You know what I mean? You know what I'm talking about? So you can go like, oh yeah, euro dollar up, Kiwi dollar flat. Well, there you go, eh? So this long is way better than that short. Okay, now these are only on 15-minute charts. And we're also adding a boatload of cross pairs on this stuff, right? So that's another thing that I worked on this weekend, in particular with the trend radar, adding dozens of cross pairs. That's cool, right? Yeah, yeah. So right now you can focus on euro. Okay, again, look at our trend. Or then you just, oh man, that was fixed. I have an old iteration. Hang on. Wait. We went here. What were we just doing? Oh, the technicals. Yeah, yeah. Well, I don't want to click it, but that was fixed. I'll double check and see what's going on. Let me talk to Aiden. What's he doing? Oh, cool. Yeah, so this is TRADARS 2.0, and there's been many updates along the way. I just didn't rename the version, but there's been so many, small updates that I'm like, okay, we need to have a new version. And then about a week ago, I created a new version and destroyed the entire back end and built it from scratch, knowing what the end goal is, meaning we already built all the analytics, but now the back end is so complicated because we built it, one version after another, after another, after another, after another, and all of a sudden there's duct tape everywhere, right? So I then destroyed the back end and rebuilt it, and so that's going to be called TRADARS 2.5, and it's coming up very soon, hopefully this week. And so I want to double check.
Good morning. I processed the overnight data to
2.0. Let me go to swing. Yeah, see, it works there. So public. And then I'll refresh. And then we'll go to technicals and we'll go to swing. There we go. Cool. Oh, yeah. Wow, that is crazy. Swing still has the old breakdown. I already got rid of that, but I guess. Anyways. See this where it says bearish outlook, neutral mixed, bearish outlook? That's not supposed to be there. In fact, so it is in the back end. So Aiden just forgot to remove that. But anyways, no worries. All right. So outlook here, not obviously not bullish. So right, but what we want to look at is the chart. Now this is based on swing. Swing. This is not your 15-minute chart, brother. This is your 4-hour chart. So it is, even though it may be up today, it has been down, right? That's how you want to look at it. So when you're doing multiple time frames, think about starting on the high time frame first. So let me get my drawing tool. Okay. So you want to look at this and ask yourself, are you trying to catch a roll reversal? Okay. Is this your plan? That would be risk on. I'm not saying that's what you should be doing, but you might be. You might be waiting for that. Then what you would do is the next step in your process would be waiting for this slope to turn north. Right now, it's not a good scenario. Aussie would be better. See how you may be bullish? Or maybe buy dip time. Worst case scenario, we come down to here, test 70, and then work our way up. Possibly, right? And then you can go, of course, we can add pairs. You can change it to crypto. You can, we have a lot of crypto now and adding even more. Gives you, right? So now, again, we're on 4-hour charts. And look how things seem to be maybe improving on crypto. It was pretty nasty there for a while. And then the ultimate is starting way out here. Long term, what should we be doing? And I like the longer term first. Okay. I like the longer term first. For sure, I like the longer term first. Because it's our strategy, right? Now, trends change for sure. Things could have been up for a long time, and then suddenly they're not. Okay, so the goal here is to align as much as possible. All right, so let's just go to our traditional charts here. This is our Skippy Scalpy of the yens. What we know is the yen is strong in our risk-off moment. We're a couple of days away from April. And so if you believe risk on will come back, okay, then you will take this week's projected low. Okay, this is what the chart says, by the way. If you're a bear, that's the weekly projected low, the implied volatility. Somewhere in there. I can get more specific. 115.60 as a high predicts 114.27. Yeah, Don, subscribers at TRADARS last week decided to move our YouTube meeting to the morning. So I started at 8. And then there could be, or will be, or likely to be a coaching session at noon. So 8 and 4 hours later is 12. And then I do a meeting at tradars.com at 4, focused on the New York close and talking about what may or may not happen the next day or the rest of the week. It gives me opportunities to talk about detailed fundamentals and stuff. And on Thursdays, do our swing trading, which plans the next week in advance. And then 4 hours after that, Maida is likely to be doing her Asia Fade session. So what that ends up being is a live stream at 8 in the morning, 4 hours later, one at noon, 4 hours later, one at 4, and then 4 hours later, one at 8. And that would be a typical day at tradars.com. That actually makes sense, doesn't it? Maybe one day we'll have one at midnight and another one at 4 a.m., and then we'd have a complete 24-hour coverage. Dreamer. A full lid. Maida says, a get together in the Asian session. Yeah. A meetup. So here's the next thing. If we didn't have a war, but we do, but if we didn't, that would be the first step of later this week, and then eventually going even higher. Okay, normally I would take Kitty Cat to, we'll call it 118, 119, right? You know, Maida, you also have, that Asia Open is when I like to watch Bloomberg specifically. I find Bloomberg in Asia is great, and CNBC just doesn't really do it. It's a great way to stay updated. Yeah. So again,
Good morning. I processed the overnight data to get you up to speed for the European session. We are currently navigating a decisive risk-off environment as rising bond yields exert downward pressure on global equities. The U.S. 10-year yield has climbed
up to speed for the European session. What is he talking about? So he's working on stuff in the background. It's so funny. So I'm just going to have to keep this window open, or I could shut it, but I don't want him to stop working. So he might talk over me every so often. All right, let me go back. If it wasn't for the war, I would have a plan that looked more like this. Something like that. Okay. If there wasn't a war. If there wasn't a war. Yeah. If I were a little girl and I were to marry. Yeah. If there was no war. Yeah. So what I guess the way to think of it is normality versus reality. And it doesn't hurt to remind yourself what you would normally be doing in April and then really put into perspective what's happening. Like, what is the reality? Like, for example, the stock market, when you look at NASDAQ, it is now down 10%. I'm happy that our Council of Investment Advisors, we actually planned for a 10 to 20% decline. And so now we've reached the, and we want to buy specifically NASDAQ, right? I have permission to start engaging. Now, as an investor, which is different from a trader, right? As an investor, I could buy some at a 10% discount. And if it keeps falling, I can buy some more at a 20% discount. It's okay. Because I'm going to own them forever, which is much different from a trader, right? If you're an investor, right? So I want to own NASDAQ forever. So if I can pick it up at a 10 or 20% discount because I understand seasonality. I didn't predict the war. I predicted the decline in the stock market. Yeah. Cool. So now it's down 10. Great. And it was supposed to be, the correction is supposed to happen right before, right after April. Well, Wednesday's April 1st, and we're now technically down 10% from the highs in NASDAQ. I'm like, well, that's good. That's what we were planning on. Is it going to drop 20%? I don't know, but I'll buy some more down there too. Okay. So this is a great way to say, this is what I think would be normal, and that is may or may not be happening right now. And I'm able to analyze both. Yeah. Also, be ready for a catalyst. I don't know how many declines you've seen, whether it's intervention or recession, or something else. Right? A demand shock like COVID, a supply shock like war. But the recovery can be quite fast. And so you have to be in tuned or be ready for both bad news spiking oil to 200, but good news dropping the oil down to 80. See, in our analysis of oil back when it was $50 and $60 a barrel, our analysis showed us that oil was going to go to $92 a barrel, WTI, and it would hit probably around July. Hey, not bad. That had nothing to do with war because we didn't know about the war. So now that we're up there, now what? Well, then you can say, well, what would be normal for this time of year for oil? I think we should probably be at 75 on our way to 90. But at the end of this second quarter, which we're about to start. So there's about a $25 premium, risk premium on WTI. This is my guess, but I'm sharing with you how I would do such a thing, right? So actually, why don't I just pull that up? Okay, we can just pull this up. Yeah. So again, if I analyzed, or let's say I projected, or previous to the war, that we would be at 75, and now we're at 100, then the difference is $25 a barrel, right? That's due to the risk premium. So if suddenly the United States and Iran announce on Truth Social resolution, I would expect a $25 drop. Are you ready for that scenario? Yeah. So that's why we want to have both right now, because we don't have normality, but you should still know what normality is when it comes to what the markets could, should, shoulda, woulda, coulda be doing, and then trade what's happening. And I would treat them both as short term and long term. Like I said last week, I said I would never hold oil short over the weekend. If I held it over the weekend, I would hold it long. Yeah, we jumped $2 or $3. Because I think peace is much more difficult than war. Okay, risk premium. I think one of the drivers today of the stock market, which opens later, is the direction of oil. Are we going to come down, tickle 100, and then head up to 105 today? Or are we going back to this 95 level, let's say, or whatever this is? Let's check it. 97. That would take a lot of pressure off, wouldn't it? Right now, it looks like some money is already going into the 10-year T-note. Yield has just dropped by 1.58%, which means somebody's buying U.S. Treasuries. Gold has been climbing. Are you guys watching gold? Is that something that you've been trading? Like, we go out to like a 4-hour. Okay, you can see we have a projected move. We've done this a long time ago, right? Higher high, higher low. Okay, working our way up. Part of the analysis here is this idea that central banks may have been selling gold to buy their own currency, because that would drop the value of gold but strengthen their currency, and a stronger currency fights inflation. It's disinflationary. Also, institutional investors and hedge funds and others had bought gold and made a lot of money on gold, as a hedge, and then suddenly, right, a hedge against longer term inflation. And really, it was de-dollarization, and it was the loss of Fed independence. So that was a weak US dollar, that was strong gold. And then this idea of Fed losing independence has pretty much gone away under war. So there's a less need to own gold, right? And then we get into the war situation, and the value of your stock is likely to fall. And you're already in gold. What do? Buy more gold? No. What you can do is sell your gold for profit, have cash on hand, and maybe use the options market to hedge. Or buy oil futures, because ultimately that's the hedge. That oil goes up. So you buy oil futures. And even though the stock market has fallen, you're making money with futures going, right? Energy futures going up. And now you're making money there. So you made money on gold, old trade. Now you're making money on oil. And that's where you're making your offset of your cash position. But you don't intend to sell your cash position in the stock market. So you're more like what I'm talking about earlier today. The stock market's down, NASDAQ specifically is down 10%. Now you can sell a little bit more of your gold, or you can sell a little bit more of your, excuse me, of your WTI. So now you got some cash again. And what can you do? Well, you can buy some NASDAQ today. You could also buy some 10-year treasuries. Well, NASDAQ's not open, but somebody's buying 10-year treasuries because they want to lock in pretty close to 5.5%. Sorry, 4.5%. They're like, you know what, that's good. Things are changing. We're getting into the second quarter. Things are not bad. Trump is at least talking about peace. So every day for about a week now, he's been talking about a deal. A deal's coming. A deal's coming. All right. Well, maybe, you might say, well, this, that, and the other thing. I don't believe it. He's a liar. Or they're cheaters or whatever. Whatever. But it's possible. And so at what point do you trade the new situation? Not what you think, not what you feel, not what you hope for, but is the possibility of a resolution coming closer to fruition? Is it more probable now than 3 weeks ago? Don't make the decision based on what TV network you watch. Don't make investment decisions based on what Fox News or CNN tells you. Okay? You're doing yourself a disservice. We have the data. Make a decision on the data. So going back to gold here, maybe at some point this becomes what used to be very attractive is now attractive again. Maybe, right? Maybe you get out of your hedges and get back to buying what you thought long term. Long term, you could say inflation's not likely to go away, but GDP is not going to collapse, and that the US dollar will weaken because there won't be a need for a safe haven flow. In fact, the US economy expands and Americans buy more BMWs again. They buy more Porsches again. They buy more Mercedes. Heck, they might even buy a Volkswagen. Yeah. Maybe we go back to normality. and that would be a weaker dollar. And with that new normal, you would have higher levels of inflation than traditional, and that you would need some gold for. In particular, like if we're farting around with a 2% GDP and a 3% CPI, that'd be very good for gold. Okay, not stagflation. So I'm just saying, be mindful of the long term. Don't be caught up in the hype, right? Oh man, now you know I have to quote, right? The great Public Enemy, right? I don't have the energy this morning. I'm tired. It's been a long day. Yeah. Don't believe the hype. As an equal, can I get this through to you? My 98s are booming in my trunk with funk. All you punks can't stop my dunks. Yeah. There. That's it. That's enough public. So, anyways, yes. Today could be bad. Today could be horrible. Today could be great. Today is all short term, which is perfectly fine. Start on the higher time frames like I was showing you. Start on the higher time frames and then drop into the smaller time frames and say, okay, I know what could and should and what normally to be. And then there's now. And you can take it another step further, perhaps. On the short term, you could be more of a day trader, let's say, or intraday trader. But if things line up with, we'll call it seasonality or normality, then those are the ones you hold. Those are swing in position. So, like, let me give you an example. As you know, because we talk about it all the time, around this time of year, I start looking for positions I can hold for 12 weeks. So if I thought gold normally goes up, I want to be long for 12 weeks, so I buy and hold. I still use the same stops and stuff, but I don't drag the stop, 50 cents below price. I might get it to break even in a day or two or three, and then not touch it for 2 or 3 weeks. And then lock in a certain percentage and just let it keep running and just, intend to never get up, basically, right? But if it normally goes up, but gold falls here and starts to head down to do a double bottom, let's say, I can day trade that down. I could scalp it. I could mark it open. I can, so I can take it down for hours at a time, but I want to be long weeks at a time. You see? Aha! Different time frames. Now, if you had no idea what gold usually does in April, well, that would be impossible for you to do. And right? And that's the problem. All right, what do you guys want to do? What do you guys want to trade?
Pound, repricing risks into spring. Rabobank. Gold rises as U.S. Treasury yields ease while Middle East tensions escalate. Eurozone, inflation fears rise on war shock. ING.
U.S. Treasury Secretary Besant, oil market is well supplied.
Bulgaria, inflation rises to 3.9%.
Noke. Energy support in Norges Bank, hawkish shift. MUFG.
Fact box what G7 countries are doing to cap energy prices? Can the RBI save the Indian rupee? It's complicated. Deputies from Iran and the U.S. send mixed messages after Trump's morning pump.
Pump up the jam, pump it up while my feet are stomping. You have no requests, huh? All right, well, I'll start with the stock market. Oh, Jim wants it. Yeah. Yeah, Dre, we are doing updates, but you should be able to log in. Are you going to tradars.com? Click and log in there. Emil says silver. Yeah, we can do that. Look at our plans, guys. We did this, a week ago. We planned on it coming down to 62. This is all expected. The thing is, it's part of the plan. Do you have a plan?
Good morning. I've processed the overnight data to get you up to speed for the European session. We are currently navigating a decisive risk-off environment as rising bond yields exert downward pressure on global equities.
Sorry about that. Like I said, that's going to happen from time to time. So what happens is he's updating things, and he, meaning Aiden or AI, he updates things and then refreshes the page, and then, he tells you the new analysis, right? Let me tell him about his European thing. All right. So what do we have? The euro, dollar, and silver. Okay, well, let's do that. Euro, dollar. And this is not the layout that I prefer. Let me move this around. So euro right this second is strong.
Good morning. Let us get you up to speed on the shifting tides within the global markets. The market has pivoted.
Boop, 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 boop. All right, let's go this way. Euro is strong.
Germany cuts silver content in euro collector coins as prices gyrate.
And what? What do we see here? Not bullish. So you're like, on the 1 minute, Wayne, it's becoming bullish. Uh-huh. But you probably wouldn't do euro dollar, even though euro is strong. Dollar is probably strong when we are in a risk-off scenario.
Oil market well supplied. Control of Hormuz to shift over time, Besant says.
So the next thing is then find what is weak. And what we've seen is Kiwi and has been weak. Okay. We also believe that the Bank of Switzerland wants to intervene when things are bad and the Swiss franc gets strong. For the last 10 days, I've been talking about the Swiss National Bank stepping in and potentially selling their Swiss franc to buy the euro to purposely weaken the Swiss franc because it benefits them. Now, I didn't just randomly do it. They had a meeting, and at the meeting, they talked about it. So if you just listen, the birds are singing. So we could be in a situation where we wake up on a risk-off day and money in the first 4 hours of the European trading session maybe was flowing to Switzerland. German inflation accelerates on higher energy prices. That they could step in and say, wait, we don't want you to buy euro. Okay. And you get like moves like, what? What? Yeah. So
U.S. stocks may regain ground following last week's slump.
So are you ready? Oh, look at that, and hit our price and everything. Is that something that you're trying to play? Yeah. So euro dollar, I don't know. And then take this and let's go out a little further and say this rally really isn't that big of a deal. General euro is a bit of a dog with fleas, huh? At least on a 15-minute chart. You can take this out and look hourly. And you can take this out, look 4 hourly. Try to find the time frame you want to start your analysis on. Huh? I like higher time frame. Now these indices, it's euro versus everything, not euro dollar. It says euro dollar here. It says euro dollar here. That's just because it's a chart. It's euro versus the G10. In fact, I think it's euro versus the G7. Yeah, Jim says that the things are shifting a bit here at the open. Maybe, but like I said, there's a bunch of things that may kick in today. One of them being an institutional investor simply wants to buy because the NASDAQ is now negative 10% for the year, or negative 10% from the high. Yeah, cool. You might have a mandate that you buy every 10% decline. Why not? Buy some at negative 10, buy some at negative 20. You don't think it's going negative 50, but you also don't want to miss out. The other thing is part of the thesis of why I expected the stock market to fall had to do with portfolio construction and management. Things like rotation. Because, well, this is normal. This is what you do. And so the rotation is likely to be over, meaning you sold your best winners, you sold your worst losers, right? Now you got cash, and now you're getting into the new stuff right before or right after the start of the second quarter. And you're like, but what about the war? None of that would have much to do with war except what they buy to hide out. So, for example, they meaning whoever money manager may have decided to take profit on their biggest winners and biggest losers, and that may be on account of the war. The magnitude of what is normal was bigger. So you take some money out of gold, you take some money out of I don't know. Hopefully you weren't shorting oil or something, but you know it would have negatively impacted some of your investments, right? Okay, so you get out of the worst of the worst, and you get out of the best because you have to pay the worst of the worst with something, and then you get your general portfolio, right? And so now you have this cash. The second thing that you can do now is say, well, I have no idea what's going to happen in the next few weeks or even the next quarter. You're like, I don't know. Normally I buy the stock market, but I don't know. We got a war. We got a new Fed chair coming up. You're just like, you know what? And all my clients, they're calling me and they're freaking out. They're super afraid of the war. They're super afraid of Trump. They're super afraid. They're super afraid. They're super afraid. So you as the money manager say, hey, don't be afraid. I'm going to buy a 3-month treasury and we're going to hold on to it until we can get to summer and cool things up and see how things cool off. If they have, we'll talk about it then. If they haven't, we'll just buy another 3-month treasury and come back in September. We'll just hide out in treasuries for a while. Well, we haven't seen that recently, but it makes sense the last couple of days of the quarter to just say, we went to cash, because we rotated out of certain assets, and now we'll hide that cash in a 3-month treasury. And if things are better, we rotate out of the treasury back into the stock market, or we just rotate out and buy another treasury, hide out there for another 3 months, and we'll just wait it out. Which is better than what most money managers do with your retirement account, where they just let it fall 30%, 40%. And you call them like, what's happening? You're like, don't worry about it. We'll just ride it out. Bullshit. Excuse me. Because you need to cover that with risk, right? You got to cover the risk. So going to cash and then buying a treasury is addressing the concern, not riding it out. Now, my retirement account is already hedged. So, yeah. So I'm already good enough. All right. So euro. Yeah, you know, you really just got to pick your time frame. And like I said, I prefer to start higher time frame and say, well, currently dollar's strong. If euro dollar wants to fall, it's going to fall. And right now, the slope of the mean is bearish. Looks like, right, when we're 1 or 2 standard deviations above the slope of the mean, it's falling. You know, just kind of go with that. I don't want to flip too much when everything is news driven. If that stops me out, it stops me out, but I don't want to trade on it, you know? Now, we had a question about silver. XAU, XA me. All right. Well, I'll just have to change this. You know what? No, I'll add it back. I deleted silver on here to make room earlier, but we can go add chart, metals. There it is. XAG silver. All right. This is your MT4 on drugs. Let's clean this up. We can say, silver, give me the trade plan for a bear on silver for the month of April. The month of April? But Wayne, it's not April yet. Really? Okay. So what is the April trade plan? Sell at 76, maybe 75. So we're only at 71, but this is what it says currently. It'll update over the next couple of days. So you have to think about what you want to do. You also have to put things into context. Okay? So, if you're a bear, that's what your trade plan is. This is the beautiful thing about these pivot points. So I make you declare whether you're a bull or a bear. I would like it to be bullish. That's me guessing. So I'm going to do the exact same thing. I'm going to go position trading, but in this case, I'm going to point the pivots up. I want a resolution to the war. I'd like to continue mission. Standard deviation. I can do it this way. Yeah, I'd like that to continue. And if that were to be true, that we slowly climb, our target is 101.5 for silver. Whoa, dude. Yeah. Dude. Problem is it's trending down. So that isn't really what it means. Yeah. So I probably would be comfortable talking about more of an R1. And an R1 would probably be near that top. So it's probably more like 90. So let me adjust now. And this is me being finessey. I'm making my own decision here. So I'm like, for that, I want to know all my pivots. Okay. And so I'm kind of overriding, but the logic here is 66. Normally would take us to the 101 I just talked about. But I feel more comfortable right now talking about $91.25. Germany war-driven energy shock risks ECB hike, Commerzbank. Yeah, that's right, Jim. Thank you. Yeah, the MT5 pivot points are at Investor Boot Camp. Cool. So I'm being conservative here. Part of the reason is I'd like to think that the volatility that we've had recently, like the last couple of months, oops, like uh, this drop here, ugly, right? And then up, and then whoa, these are big drops. So I'd like to think that that's more volatility than what will happen in the future. I'm kind of saying less vol, and that actually leads to risk on and dollar weakness, doesn't it? Yeah. So you got to thread the needle here. When I'm analyzing this, I'm actually analyzing a bunch of things. But I'm saying less vol, then we're going to have an inside month. So that changes it to like the lowest low is not likely to be lower than 55, but not likely to be higher than 91. And if it, right, and if the pivot pattern fulfills, we'll stay above 66
Australian dollar
and
US
top out
dollar
at 91.
weakens on Middle East tensions as markets await RBA minutes. The US dollar Canadian dollar continues the trend higher and reaches a key swing area going back 2025.
Cool. And then we can decide later, but that would mean a huge vol month up for the month of April. All right, well, that means peace, doesn't it? Okay. This is the day Hassett was announced. So this move had to do with Fed independence. This one was related more to the war. A dollar bought more ounces of silver. Will we get this one back? Well, worst, how do you say it? Well, I guess if his nomination is rejected. But I think he's actually a good choice. I think he will maintain Fed independence. So is his nomination likely to be rejected? No, I don't think so. Will he likely become the new chair of the Federal Reserve? Yeah, I think so. So no shocker there. And if it was up because of the threat to independence, is there a need for silver and gold to go to new all-time highs? No, probably not. Not for a while. Now, I own gold. Oh, and this is silver, but to me, they're very related. I own gold, and I can sit on it. Yeah. And just own it. And just say, well, I think in 20 years, the US dollar is going to be weak. Kill. Well, I'm hedged. There you go. Kill. Good enough. But I'm trying to say, based on a probable outcome for the month of April. Maybe 66 to 91. Now, if you want to do a leg down, okay, and this is where these pivot points are so good, so good. Template, pivot point. You're like, okay, Wayne, tell me if I'm a bear on silver because the war is going to drag on through the month of April. Okay. So then we go to position trading, bearish bias. And that's it right there. 76 to 48. Yeah, we're on our way for oil to drop 33%. Sorry, oil. Silver. What do you think, guys? 33%? Well, that looks like this. Which one do you guys, right? Which one do you guys think are likely? 50 or 90? Where do you think the highest high or the lowest low? Or which price do you think we could hit in the month of April? How about that? Doesn't have to be the highest or the lowest. Which price are we likely to hit? 50 or 90 in the month of April? 50 or 90? Type in 50 or 90. Bank of Canada, dovish tone and long hold signaled, TD Securities. Silver's up 2.65 right now. You guys. $70 is not 90. It's 71 now. You can't say 70. 60 or 90. Jim's all over the place. 60 and 90 in the same month? Oh my God. Well, is there a way? What's a good way to analyze probability based on not what you think, but what has happened? Is there a way? Well, Richard says 60 if dollar strength continues. Well, that's the decision you need to make. Why would the dollar
Good
continue to
morning.
be
Let us
strong?
get you up to speed on the shifting tides within the
The war drags on or gets worse. Denise brings up a good point, and I guess Jim did too, where either way it seems very likely. Well, this is where, you want to look at things like seasonality, what is normal, and then separate that from what is happening and trade what is happening. But if what is
Good morning.
happening,
Let us get you up to speed on the shifting tides within the global markets. The market has pivoted into a decisive risk-off stance as global equity indices, led by the Nikkei 225 and Nasdaq 100, face significant pressure. This flight to safety is explicitly reflected in the U.S. 10-year yield, which has retreated to 4.368%.
I don't know where it's
Indicating a
coming
surge
from.
in bond demand amid rising systemic concerns. Biggest movers right now, natural gas, volatility index, and Nikkei 225 are down. Ethereum and silver are up.
Is that right? Yeah, VIX is now down 11% because it was at 32 and now it's below 30. Interesting. That's a big percentage change. I'm not sure where that came from, though. I have lots of windows open. I'm trying to mute, but like I said before, he keeps working. Then he does an update, and then that page loads. And the problem is I have 40 pages of it. Whatever. It's just me talking over myself. So it's like this to me. It's like I said before. You're like, well, if silver remains bearish, but it's normally bullish in April, yeah, okay, well, we'll take it down. But, 60, 50, 40? I mean, we're looking at what we see here is actually $41. Now, is that likely or not? I don't. But that is the trend. Okay. So if you recall, and I'll just draw this, when I said, hey, if you were a bull, where are the buy zones, right? Well, the buy zones are here. The buy zones are here. And then April buy zone is here. And we're like right in it right now. Cool. But notice buy zones are falling. That's not bullish. Buy zones are higher highs. None of those are higher highs. So you really can't be a bull until you get like higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Like whoa. That's not what's happening, is it? Okay. Lower low, lower high, lower low. Oops. Got a fancy mouse. Lower low, lower high, lower low, lower high, lower low. Well, that's what the chart says. Okay. That is what the chart says. You would think $40, not even 50 or 60. What the chart says is sell around 75, take it down to 45. Dude, shut the back door. Well, that's what it says. Okay. What I think is more interesting than that, because that's straightforward. Okay. That's just what it says. It's like reading a book. Reading a book is easier than writing a book. Trust me. Okay, so I'm reading the book. That's what the book says. All right. Now our job is to say, well, I'm going to continue to do that because it is, right? snap back to reality. Gold prices tick higher amid dip buying, but easing rate cut hopes limit gains. Okay. But if things change, and it does become more bullish, that you know it might be bullish for 12 weeks. How do you know that? You did the research. You have the seasonality. It's all inside TRADARS, right? So you're like, well, I'm long-term long, but it ain't happening right now, so I'm short-term short. That's how you deal with it. You have to understand where you are in the market. Right? It's just, you have to adjust. It's like, do you shoot the ball from half court? Well, if there's 1 second on the clock, yeah, it's not ideal, but you have to have situational awareness. You shouldn't be dribbling the ball and the clock runs out and people are like, dude, why didn't you freaking take a shot? Huh, Duke? So Duke was winning by 2 points with 2 seconds left, and they had the ball. They won again. They're going to the Final Four. They have the ball. There's 2 seconds left. They're winning by 2. And then some UConn freshman, a freshman, steals the ball, takes a couple of steps because there's only 2 seconds left in the game, and shoots from a million miles away, and boom, goes in the net. 3 points. They win the game. The number 1 seed Duke is out. Dude, what the hell? Dude, the two things, like the kid that stole the ball. No, he had to steal the ball. I mean, you have to do something. There's 2 seconds left and you're going to lose. You got to do something, anything. Just be radical, get the ball, and shoot it as fast as you can.
Falls to 6-month low.
But the other kid from Duke could have just stood there and held the ball in his arms and just said, There's no, we already won the game. Like, what are you dribbling? Right? Just stand there and hold it. Put it in a vault for the next 2 seconds. So anyways, dude. So situational awareness, right? So you're short-term short until something changes that, and you know. Now, what is likely to change that? End of the war, right? A ceasefire announced, a peace deal announced, a Trump Truth Social tweet. Yeah, those things could happen. Is it going to go all the way back up here? No, I don't think so. I think that's why I said 91 and not 102. Because what got us to 102 was the potential loss of Fed independence, and we don't have that worry. Yeah. Cool, right? Since you don't know the future, you should have contingency plans. If this, then that. Low. I want to load. Is it over here? Yeah, I guess so. I want to load for the day silver. Based on what has happened so far today, we are projecting silver to rise to $73.27. Okay. That gets us 2 shakes of a lamb's tail away from this. But we have 2 days before this sets. Okay? That's one way of doing it. And then you can take longer term views. Okay? And we can go back to TRADARS here. Whoa, whoa, whoa. Let's see if the chart will load better this way. Yeah, I guess so. All right, cool. So we have it potentially. That's interesting how this didn't draw. It's not drawing, but it's doing the calculation. 77.53. That's interesting. This time frame. So this is from last week. We were talking about getting to this price where we are right now. Actually, how awesome is that? Base was 71.80. We're at 71.30. But anyways, previously projected 77.53, 77 and a half. Where does that get us? 77 and a half. That just gets us right in there. And then back around. So 76 seems fine. 75 can seem fine. Cool. So I hope that was helpful. I mean, we have these tools, bro. Oh yeah, you think Richard thinks the JP Morgan might want to get involved in their 20 million barrels a day oil? Think about the import export and financing and insurance of that. Huh? Yeah, I agree with you, Greg. 50 to 60 bucks is a lot for silver. The biggest thing that I'm trying to share here is that there are 2 things that got silver and gold to all-time highs. In particular, silver is extraordinarily high. Hey, if you can get $40 for silver, that's a great number. So here we are at 70, and we were at 100 and something. Okay. The thing that got us to 100 is not a thing anymore. Does that matter? I don't know. That's for you to decide. And war has not pushed this up. So if you thought the war is going to continue for a while, well, then it would continue to do what it has been doing. And now we're doing the mathematics and the statistics. Okay? So what I showed you earlier today with silver is that we're in here. This is, okay? And that projects to here, but what is your projection longer term? Is it there? Cool. Then you want it to go up. But what you're watching is for TRADARS on the shorter time frames, like the 4-hour and the 15-minute, to then say, okay, we get here, and then it rolls over. It goes from projecting up to projecting flat to projecting down. You should understand how to read the book. If it was projecting up and we get to 75, 76, 77, in the next, it's going to be in the next couple of days, right? Early this week. And then it changes bearish. You're like, oh my God, I'm going to sell it at 76 and I'm going to target 40, 50. Remember, it said 41 or something, right? So off the central gets us to here. Yeah. This is, if 76 holds, yeah, we're talking about $41.63. If 75 holds, it'll be straight up.
Good morning. Let us get you up to speed on the shifting tides within the global markets. The market has pivoted into a decisive risk-off stance as global equity indices led by the Nikkei 225 and Nasdaq 100 face significant pressure. This flight to safety is explicitly reflected in the U.S. 10-year yield, which has retreated to 4.368%, indicating a surge in bond demand amid rising systemic concerns. Biggest movers right now, natural gas, volatility index, and Nikkei 225 are down. Ethereum and silver are up.
Yeah. I'll quit messing with them because that keeps loading. Loading and bloating. But yeah, things are not so bad so far, meaning they were so bad it was time to buy. The description is money has rotated and people are now buying because the Nasdaq's down 10, because it's the end of the quarter. That this is a normal portfolio management phenomenon. Yeah, and I am in buying mode. The Council of Investment Advisors, they said, take cash out of here to buy when the stock market fell. You know what? I mean, the stock market was only down like 3 or 4% at that time. Now it's down 10%. Sweet. Good. They made a good call. But they also said, all right, for April, May, and June, we expect prices to, at least in the beginning of that period, fall, take all the income, and just keep buying as it falls. So as of today, we are buying. Some might be today, some might be tomorrow, some might be Wednesday, Thursday, Friday, the 1st, the 2nd, the 3rd, the 4th, the 5th, the 6th, the 7th, the 8th, the 9th. We're not trying to pick the bottom. It's unnecessary if I'm going to hold these assets forever. But you have to know when to hold, know when to fold, right? And know when to, get in the next hand. So yeah, it's falling and we're buying. Drip. Yeah. So that's through a dividend reinvesting program. So Kartik, we already talked about that earlier today. Think about a dollar being a risk off safe haven and yen also a risk off safe haven. So in a normal, like, we'll call it a demand shock, like COVID, they're both likely to be strong. So you wouldn't trade USD yen, you would trade USD and yen. The second thing that we had talked about is that this is not a demand shock, it's an exogenous supply shock, in particular with energy. So now there's going to be twice as much yen put into the interbanking system than normal to buy the same normal amount of energy. So USD yen would behave differently in that scenario in which we are currently in. Okay. So those would be the key fundamentals. To talk about monetary policy and to talk about the Tankan survey, that's macroeconomic data, which goes into our comparative analysis. Okay, that's one thing for sure. But what supersedes that right now is these economic reports are talking about what happened in February. And we're freaking out about what's going to happen in April, May, and June because energy prices are so high. It's like collapsing industries. Like farmers need to plant and they need to buy fertilizer, but fertilizer is doubled in price. So now they're going to dump their, I don't know what you buy, phosphorus or something. You're going to dump that and you're going to buy potash this year. So the share price of what used to be called the Potash Corporation of Saskatchewan is probably going to go up. But you'll also make decisions like if this availability of fertilizer is down because of the Strait of Hormuz, so therefore the price is high, I'm not going to plant corn this year because I thought I was. I thought I was going to plant corn. But corn takes twice as much fertilizer than wheat. So I think because of high fertilizer prices, I'd rather plant wheat than corn. Cool. So, which tells me in September, wheat prices are going to be very low and corn prices are going to be very high. Are you in that trade yet? No? Why not? What's wrong with you, boy? You see how fun investing is? Yeah. By the way, Canadian fertilizer companies, yes, they get a lot of their nat gas from Bahrain and Qatar and maybe Iran. Probably not, but maybe. But they have other sources that are much more friendly that have nothing to do with the Strait of Hormuz. So is it Trinidad? not. All right. Let's go. Maybe it is Trinidad. All right. Do, do, do. Ooh, 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 ooh. We got Trinidad, Tobago, Grenada. Yeah, I believe it's Trinidad has nat gas. The good thing, if you will, about Trinidad nat gas is it's dirty as heck. Yeah. Well, the good thing is if it's got a lot of junk in it, then when you crack it, not frack, crack. When you crack it, you can pull out nitrogen and phosphorus and all that kind of stuff that you would need to make fertilizer. But they don't have the infrastructure. So Canada, because Canadians are kind-hearted, beautiful people, they buy all the nat gas from Trinidad, and they take it all the way to Canada.
Good morning, Aiden here. Let us get you up to speed on the current shifts within the global markets. The market is navigating a decisive risk-off environment characterized by a significant contraction in the U.S. 10-year yield, which has dropped by 8.8 basis points since yesterday. This downward movement in yield signals a classic flight to safety, exerting downward pressure on risk-sensitive currencies like GBP and weighing heavily on Asian indices. Biggest movers right now, natural gas volatility index and Nikkei 225 are down, Ethereum and silver are up.
Okay, I want to remind you that that's not normal, this repeating. It's because I got a window open and I have Aiden doing work, and every time he accomplishes something, he reloads the page, and then the voice starts again. When you log into TRADARS, you just get that one update, and you can mute it and all that kind of stuff. All right, so
Good morning, Aiden here. Let us get you up to speed on the current shifts within the...
All right, I can't take that. Okay. All right. See how patient I was for 5 seconds? Okay. So we're going from essentially Venezuela, okay, Trinidad, and it's going all the way to Canada. And then Canada, I believe it's by a company owned by the Potash Corporation of Saskatchewan, but the refinery is probably, I don't know, closer to home. But anyways, they take that dirty natural gas and they crack it and they make fertilizers out of it. And then they sell it to the Americans. So Potash Corporation of Saskatchewan is a massive producer of potash. Massive. All of it comes from Saskatchewan. And they use none of it. So 80 to 85% of all the potash in Saskatchewan, which is a huge percentage of global, goes to the United States, and about 15% goes to everywhere else, like India and China. That's pretty much it. So the other thing they do is then they get the nat gas from way down here in the southern Caribbean, and then move it up here, crack that, and sell it to the Americans as fertilizer. So think about that. These guys have available nat gas. What about companies that are based out of Europe or serve Europe, but get their oil from Bahrain and Qatar? and they can't get the nat gas out. Uh-oh. So now, maybe with this type of knowledge, you would be doing things about like, well, how do I make money on this knowledge? Yeah. Now you're thinking. I know you want to watch Love is Blind. But you're working. I know you want to watch Fallout again. Okie dokie. But your job is to make money. Yeah. So how do you, right? Well, then who gets that nat gas? Who imports it? Who cracks it? And then who sells it to America? And if Europeans suddenly are trying to demand that, what happens to the price? Price goes up. Somebody's going to make money. Somebody's going to lose money. Okay. Here's the next problem, guys. So everyone's talking about Hormuz, right? Yeah. And everyone's like, where are you going to put the Marines? Are you going to put them there? Where are you going to put them here? Okay. Well, that's old news. I think what the next thing you should be thinking about is, well, what about this one? You think this is going to be a problem? Yeah. Well, Yemen is full of the hoochie mamas firing off Iranian missiles. Yeah. So that could be a problem. Who's going to win? Who's going to lose? If you go to what's the name of the town? Dubba? There is I forget the name of it. Yanbu? One of the it's not Jeddah. There is a pipeline. I guess we could just look by the terrain. There's a pipeline that drops oil off over here somewhere. Yanbu? Is it Yanbu? Yeah, maybe that's what this road is right next to it is a giant pipeline. So there's a pipeline. Well, we definitely have a port here, don't we? Dolphin Beach. Okay, that's probably not where the port is. I don't. Yeah, okay, well, that looks about right. So normally nothing's going on here because there's no reason to use this facility really unless Hormuz is closed. And then you can ship, I think it's 4 million barrels a day of oil on that pipeline. That, right? And then you can put it onto a boat. You look at here, there's no boats, but you could. And now the nice thing about this is then the boat can get you out here, huh? Get yourself to Europe or anywhere else you need to get. Yeah. So there hasn't been a major need since the 70s, really. 70s, basically, late 70s. There hasn't been a need. And we had a revolution in Iran. That was what's going on. And the weaponization of oil by OPEC. They're too big to go north, huh? Okay. That makes sense because one analyst I was listening to was talking about how that would threaten the hoochie mamas would threaten them. So I guess you're right, Greg, or it seems you're right. You know you're right. Greg's right. You load up and you head south, and then the hoochie mamas become a problem. So one of the things I was speculating about is like the whole world keeps talking about the Marines going into Carg Island, right? There's Carg. Why? Why would they do? Oh, well, it takes over Iran's oil. Yeah, whatever. Still can't get it out of the Strait of Hormuz. What's the point? As long as Iran is producing oil and we want to buy it, then let them do it. And, so, but if they're laying mines here and throwing out missiles and drones, that doesn't change anything. Now you got Carg Island, but you still can't get oil out. So what's the point? So
Good morning. Let us get you up to speed with the latest.
My speculation is the Marines are for Yemen. That was my guess 2 weeks ago. Now they're in the region. I don't know where they are or what they're going to do. But it seems to me, maybe we need to get the hoochie mamas out of the picture. I don't know. This is a very ancient part of the world, huh? There's some pretty amazing history there, I'm sure. But I don't think there's much infrastructure. So this is the largest part of the world, I think, with no people, something like that. It's huge. And there's a hotel somewhere out here. Look at this, just literally sand dunes. Quite literally nothing. Nothing. Somewhere out here, there's a 5-star hotel. And I'd like to go check it out. But I don't remember where it is. But like, dude, what does this place look like? Look at this. Look at this. Oh, is that a road? No. Is this a place where the people live? No, it doesn't look like it. It's a rock in the middle of sand dunes. Oh, good. It's got a name. There's a road, huh? There's a road. Follow that somewhere to a 5-star hotel. So anyways, how interesting. Yeah, see, they have roads. Yeah, it looks like Mars, like no joke, right? How do you turn hotels on? Isn't there a way to turn hotels on? Yeah, so Straits of Hormuz, yeah. But that, unless you're just going to build a military facility here or a military facility here. And you're like, you know what? We're putting an air base and a naval, but we already have naval command, we meaning the United States. There's already a naval command in this area somewhere. So I guess it'd just be put up a Straits of Hormuz defense system. Tax them, huh? I mean, the old days you would just put a castle there. Oh, is that what you? Oh, you know the. Lewa Tsar. Cool. There it is. $2,000 a night. Cool. Yeah, it's not far enough out. I want it farther out than that, but let's see. So it's a 5-star hotel, and there's the sand dunes. And each one of the villas has its own swimming pool, and it's more of a cooling pool because it's so hot. Where are those private villas? I guess that's the cooling pools. Yeah. So you get to stay in this place. So this is for one family. You come out and there's a cooling pool. But I say cooling pool because it's so hot that they actually refrigerate the water. And then you're looking out, this way into a giant sand dune, huh? Look at that. And then there's nothing. Cool, right? You could probably get some good deals. It's probably closed due to the war. So today actually smelling like an okay day. And VIX is falling today. That's good. Still way up for the month. So there's that silver up. So let me put it back to a small time frame. And we got to 72 and failed. Remember, these are not locked in stone yet. Another 48 hours before we know the exact number. So is it possible, you might be asking me? Wayne, is it possible that that's the top? Yeah, that's possible. I don't know. And that would change everything because what'll happen is in 2 days, it'll recognize that the close was down here because This calculation is open, high, low, close. So you need the closing price. So if 72 is the closing price, or even lower because that was the high. Yeah. You would have to adjust. Slightly less fall, so you probably get less. But this is the challenge. You don't know the future. So you have to say, I'm going to make a decision on direction. You think silver down, silver down, silver down. Okay? You make that decision. And then you keep trying on the smaller time frames. So you know how to trade. You know how to trade. So let me show you, right? Let me just remind you of the basics. Oops. Okay. The basics. There's a high there, right? Yeah. And that's the implied low there. Cool. Bears sell high. Bulls buy low. Where are we going to be 24 hours from now? I don't know. I just know where bears would sell and bulls would buy. So you have to make the decision here or really here. So if we never get to 75, 76, then I think the pivot is going to close pretty much here. Huh? Therefore, you would adjust the lowest low target, but it doesn't impact the direction. If you're right, you're right. If you're wrong, get out. Have you guys ever flipped a coin to decide what to do? You shouldn't do it every day, but you should say, since Wednesday is the 1st of April, April, May, June is a quarter. So you say, for the quarter, which is funny, right? Flip a quarter. For the second quarter, flip a quarter. And you can be very specific or you could be generic. You could say risk on or risk off. Or you could say dollar bullish, dollar bearish. If you do this, your trading will improve. As a trader, you don't even have to be right. You have to have an opinion. Flipping of a coin is an opinion. If you've made a decision, you're like, oh, I'm a bear. Cool. You made a decision. The rest is just technical analysis. I don't think you're struggling with technicals. Higher highs and higher lows. You can measure with moving averages. Cool. You can use oscillators. Fine. You can use Fibonacci. Great. You can use Elliott wave. Zippity-doo-dah. What's the problem? You can just use price action alone. Now, if I were me, I would choose price action with pivot points. You don't need Fibonacci if you don't want to. You don't need oscillators if you don't want to. You don't need moving averages if you don't want to, because those are nice, helpful things, but you should be able to just eyeball higher highs and higher lows, or lower lows and lower highs, right? I mean, really, that's all it is. And then pivot points are leading indicators. I don't need lagging. That's what price action is. If you made a higher high, good. Buy it at the previous higher low, or at the previous higher high, which would create a higher low. Great. So in a way, that's leading, right? Like, for example, let me give you an example. And I guess I should do this from a bearish point of view since we have this one set up there. Okay. Lower low, lower high, lower low. So when we get to this point right here, what I do is I go boop, 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 and I say somewhere near that previous low, I want to sell. Now, it could be a little higher. I'm okay with that. It could be a little lower. That's even more aggressive. So now I have like anywhere in there. By the way, I basically just made a pivot point. I also just did a Fibonacci. And I also basically just recreated moving averages. It's different math that show the same exact thing. So you don't need them if you're just going to say, well, somewhere around here. Maybe a little higher, or maybe a little lower. Dude, that's 9 different, maybe 900 different technical indicators to tell you that. Somewhere around there. Cool. So my job is to, up here, get ready to sell, and then it rolls over. Sell, 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 sell. That's it. And the cool thing is you could look at this as somewhat of a leading indicator because price is low, and you're like, well, in the future, if it gets to this place, look to sell. So you already know the price before it's even happened. You just don't know if it's going to happen. But if it does, take the shot. Because probabilities are high because we call that a trend. Cool. Now, when you use pivot points, they guide you on in fact, they can guide you in ways like different time frames. So you're like, you might be looking on this on an hour, but this is calculated on a much higher time frame because you're looking at all of March to calculate this April play. But nonetheless, it's leading because it says, as of now, this will change over the next 48 hours, but it'll be roughly the projected target of heading down to the area of $40 to $50 an ounce. 40 to 50. And right now, probably 40. That's what this says. It's not my opinion. So, if it heads up around 75, 76, and then it turns bearish, target 40 to 50, which is, we're talking about basically a 50% decline. That's in the month of April. Now we can make adjustments along the way. Don't worry about that. It's just strategy. You're a bear. Sell the lower high. What's the problem? I don't know if I'm a bear. Well, then flip a coin. And then you can only set up selling trades. And your trading behavior will improve. Because now you either get bearish setups, which by definition are lower highs. If you see a higher high, you don't have a setup. So you take a walk. Maybe tomorrow makes another higher high. No trade. Then you find yourself at 76 or 77 or 78. Maybe it goes all the way to 80. And everyone's like, oh my God, silver's going to go back to 120. And you're like, oh, well, I guess I flipped the coin wrong. But it gets to 80 and then it rolls over. And you're like, oh, well, there's 80. I guess I'm going to take it down to 48. And you start taking a shot. Because you're a bear. You flipped a coin. You made a decision. You're a boss. You're like, oh my God, this went all the way to 80. Sell, 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 sell. Because you're a bull. It made a lower high. Did it go to 95? No. Did it go to 90? No. So what if it goes to 80 and collapses? Lower high, bro. If you need a Fibonacci, go ahead. Oh, you mean that's 66% Fibonacci retracement? Yeah. So I would adjust this, and it actually says more like 55. Sell it at 80, target 55, drop the mic. Now, if anything like this occurs, as a bear, you take a shot and you use a stop loss. And then maybe you can even build position. But if you're a bear and it keeps making higher highs and higher lows and higher highs and higher lows, well, at some point you're wrong, but you didn't sell because you can't sell higher highs. Do you understand how that protects you? So in this situation, okay, you have to wait for, because remember what I showed you. I didn't say let it go to 80 and sell it. I said let it go to 80, and then if it rolls over, lower high, lower low, you take the shot. And then the leading indicator says you can start taking profit around 50. Leading indicator. So now it's not even April. It's not even April. And we have the whole month planned out. And in one scenario, you make money. In the second scenario, you don't get a trade. So you don't lose money. We call that a major breakthrough in trading. If you're so lucky to get there, of just the pain of shitty trades goes away. And you either are right in the initial fundamental analysis, aka flip of a coin, that when the technicals confirm, you take trades that have high probability outcome. You're not trading a MACD. You're not trading is this a 4 wave or a B wave correction? Shh. This is not a video game. There's a reason why gold and silver go up. There's a reason why gold and silver go down. All you're doing with this chart is measuring price and time. So if you understand why they go up and down, you can prepare in advance. If you can't do that, we have TRADARS. Well, if you don't have, I mean, the account's free, but there are, you might have premium account. You might spend $100 a month. If you don't have $100 a month, well, then maybe you have a quarter. Flip it. But you've made a decision. And the cool thing about having patience and discipline is you don't have to take the right factor out, meaning you have to be right all the time to make money. That's nonsense. Oh, if you're skippity scalpity, yeah. Okay? Skippity scalpy, yeah, you got to have a high winning percentage because each trade is worthless. Because you only make 20 pips at a time. Who cares? Boring. Okay, great. So what about if you can remove the need to be correct? Also, what about the need to be on a 1-minute chart or a 5-minute chart all the time, all day, every day? You don't need that in a scenario that I'm talking about. Because if you're saying, well, somewhere in the next 3 or 4 days, or maybe not at all, silver's going to head up. We're going to get around 75 to 80 bucks. And then it's going to roll over. I mean, dude, that's days from now. You don't have to be on your 5-minute chart all day today. Okay. And then, if it rolls over, you can take a shot because you have confirmed a lower high after a test of 80. You saw a rejection at 80 and then a lower high at 80. So now maybe a lower high is more like 78. Then you dump it at 78 and you're targeting 48. You've just done a month's worth of work. And if you're wrong, you never got the setup. Well, then you're like, well, wait, it went from 71 to 80 and you never traded it. No, I didn't think it would happen. You need to be right all the time? No, I just need to be able to trade when I'm right. There's a difference. I've never said I'm right all the time. But when I'm right, I better trade. But if you have no idea if you're right or wrong because you have no bias, then you don't know when to be bold and strong or cautious and cowardly. Because you don't even know what's right. You don't need to know what's right. You just need to know how to trade price action. If you're a bear, you sell lower highs. That's it. What's the problem? If you're a bull, you buy higher lows. What's the problem? Well, if you're trying to do both, that's your problem. If you don't know why the trend is happening, then you don't know if it's likely to trend. So because of the lack of knowledge, and that's usually not because you're dumb, it's because you don't have the data. So if you don't know if it's likely to trend, then you don't know if you're able to hold the position. So therefore, all your trades are short term. But then you're guaranteed to not make any money. You're going to work really hard and not make any money. It's not how you do it. It's just piss poor trading because you don't even know what you're doing. You're just using technical analysis. And then you'll tell me that Fibonacci works because of how cherry blossom trees grow, or look at the skin on a sea star. Like, dude, really? This is how you trade? Really? So, even flipping a coin will make you a better trader or expose you have no patience or discipline. You flipped a coin, you're a bear. Oh, but it's going up. Buy, buy, buy. Weak. Huh? You're either sick or you're weak. Yeah. Natural selection will call the herd. If you're sick or you're weak, you're desperate to get rich quick, you will not survive. Nature abhors such a trader. You need to focus on creating value. What's your value creation? Not only do I think, right? We have this data, by the way. Not only do I think silver could fall in April, but I could tell you if it's likely to fall in May, June, July, August, September, October, and November, and know the probabilities based on weekly measurements of silver going back 20 years. So now I understand like the probabilities, and I'm like, well, shoot, this might fall for a month, but it could fall for 3 months. Am I going to take 50 cents off of a silver trade if I thought it could fall for 3 or 4 months? Like, think about all the work you're doing. If you're scalping and only doing 20 pips here, 20 pips there, but you're on a 3,000 pip trade and you take 20 pips out of it. Embarrassing. But you just don't know. So you cannot make that decision because you don't know. There is no decision to be made. So you want to be able to be knowledgeable, the truth through knowledge. That's what the Illuminati is about. They see reality. They're illuminated through knowledge. Well, that's what data is, my friend. You don't know if silver should go up or should go down based on what's normal, then how do you trade? Oh, I count waves. Really? Now, I have no problem with Elliott Wave. It just shouldn't be your strategy. It should be your tactics. Because Elliott Wave is basically what I just showed you. It's a form of implied volatility with some price action tied into it. Well, I just basically did that. Right? So I am not a Elliott Wave person, but I don't have a problem with it. But I would guess it would be something like, this is like a 3-wave correction, and then we'll have a move here, right? Now, I don't know what Elliott Wave people will do here. Like, it's supposed to be 1, 2, 3, maybe on a higher time frame, right? 4, and then 5, and then we wimp out. But that means analyzing it from this type of view, it could be quite bearish. Well, I can do it quicker, and I don't have to do counting, and I can just do, like, for example, pull silver up. And if I'm a bear, now, first of all, this is why I use pivot points. Pivot points suggested this is going to be the top of silver for the year. 116.87. It says it right there. We knew that on January 1st. Let me just reset this and make sure that's correct. Yeah, that's correct. All right, cool. Now, the likely bottom based on reverse engineering is 49.88. Shut the back door. Are we talking about $50 again? Yeah, different math, same thing. Implied volatility. That's what this does. Now, let's say there is a total collapse, which might be the end of the war and a solid Fed. You might want this to fall. Then we're on our way to $20. $20. We were at 100 and yeah. Well, that was 120 when silver is usually 38 is what I said. 38 was good, a good silver price. I have to go out daily here. So let me just pick kind of the middle here. Boop. Okay, that's 19. So I said 38 was a good number, right? Let me pop a 38 here. Boop. Okay, so between 40, let's just call it 20 and 40. Okay. You can see in 2022, we were less than that. Shoot. We were like 15. Okay. Look at that. Look at that, huh? Check this out. Back right before COVID. Yeah, it was $10. Let me get this. Yeah, $11.50, huh? Yeah, okay. Anyways, what I'm trying to say is there's some level of normality at these prices. 43. We can mark this one. No. That one. That's 50. And now we go back into a daily. And then we looked at we're using implied volatility now. And yeah, I have 48.26. 49.88. And so I just created a trade plan. Okay, that looks like this. You could take it down to $50. and then maybe we buy it back. Does anybody here know my counter trend strategy? I only teach one. The counter trade strategy. Yeah? No? Not sure how long the lag. It's 10:30. Yeah. Nobody knows the counter trend? And this YouTube lag. I have it on as fast as it's supposed to be going. Or capable of going. I don't know why it's so lagging. Try to figure it out. All right. Well, apparently nobody knows. Or nobody's here. I'm all by myself for the last 20 minutes. Okay, there's two things. The price and time of this touch predicts central pivot point. And we got it perfect. Okay. And as Denise says, quite right, this price, which we call R2, predicts the central pivot point, which we have now hit. It's the only one I teach. Now, I mean, that's amazing, right? If it's only one. And look at it hit it exactly. And look at this, not even one day above our line in the sand. I will remind you that we had 16, I can't see it. 1687, 11687 on the 1st of January. Okay. That if this is our, right, our aggressive target, and if that's hit early in the period, then you target the central pivot point as a counter trend. There is no other counter trend trade that I use. That's insane, isn't it? Not even 1 penny below the target. It can continue. That doesn't mean it's the end. That's the expected result. So it could still fall down to 50, and then we observe a role reversal and try to line it up with seasonality and take it north again. But honestly, that might not happen till September. But it's the second year in a 4-year cycle, so it'll happen the third week of August. Boom, I'm done. Yeah. Did you know that? Yeah. So you, right? This is the kind of stuff we do on Thursdays at TRADARS, right? Thursday, swing trading's back, baby. 4 p.m. 4 p.m. ET. Best day of the week. All right, well, I'll leave you to it. Peace on earth. May the